Hey there, savvy investors and entertainment fans. This deep dive is brought to you by Frugal Living Man, the perfect resource for anyone looking to stretch their dollar and make wise financial choices. Speaking of wise choices today, we're diving deep into the streaming giant's latest performance, Netflix's Q4 2024 earnings, to help you figure out if their stock is still a hot commodity. Buckle up, because we're unpacking record subscriber growth, surprising content wins, and of course, those price hikes that have everyone talking.
Yeah, what's interesting here is that Netflix isn't just riding a wave of holiday hype. They've seen consistent subscriber growth throughout the year across all regions, adding a whopping 19 million subscribers this quarter alone. That's their biggest quarterly jump ever, to put that into perspective. It's like they added the entire population of New York State to their subscriber base in just 3 months.
Wow, it's some serious growth. But what's fueling this surge? Is it just the Squid Game effect, or is there something more at play here?
Well, Squid Game Season 2 was undoubtedly a global phenomenon. But Netflix's success isn't a one-trick pony. They're winning with a diverse content strategy that keeps people coming back for more. Think of it like a buffet. They're offering a spread that caters to a wide range of tastes.
Okay, I'm intrigued. Tell me more about this buffet approach. What are some of the dishes that are really hitting the spot with viewers?
Well, their foray into live events has been a huge success. The Jake Paul versus Mike Tyson fight was their most streamed sporting event ever, and they even aired 2 NFL games on Christmas Day, which drew record-breaking viewership for streamed NFL games.
Wait a minute, Netflix is showing NFL games now? That's a major shift. I always thought of them as the go-to for binge-worthy series and movies. Live sports seem like a whole different ballgame, pun intended.
You're right, it is a significant move. And it points to Netflix's ambition to become a one-stop shop for all kinds of entertainment, not just on-demand content. They're clearly recognizing the power of live events to attract and retain subscribers.
So they're not just competing with other streaming services anymore. They're taking on traditional cable and broadcast networks.
Exactly. And they're doing it by cherry-picking high-profile events that generate buzz and excitement. It's not about offering full-season sports packages. It's about curating a selection of must-see events that people will want to tune in for live.
Smart move that makes sense from both a cost and engagement standpoint. But let's be real, all this expansion and content creation must come at a price right.
You're absolutely right. Netflix has been investing heavily in content, and those big budget productions don't come cheap. Which brings us to the other big news, price increases.
Yeah, those price hikes definitely caught my attention. Nobody likes paying more.
Yeah.
So how is Netflix justifying these increases, and what does it mean for their subscriber base?
Well, over 55% of new signups in countries with the ad-supported plan are choosing that cheaper option. So it's clear price is a factor for a significant portion of their audience.
So that ad-supported tier is becoming a crucial part of their strategy. They're giving people more options, catering to both budget-conscious viewers and those who are willing to pay a premium for an ad-free experience.
Precisely. And they're not just throwing ads in haphazardly. They're taking a strategic approach, investing in their own ad technology to control the experience and make it more lucrative. Think targeted ads, better integration, a smoother viewing experience overall. They're aiming to exceed ad revenue goals for 2025 by refining their approach.
Hold on, exceeding ad revenue goals. That sounds
Right.
promising, but what were those goals? And how does their ad revenue compare to other players in the industry? I'm curious to know how their ad business stacks up against the competition.
That's a great question, and it's one that we'll delve into further in the next part of our deep dive. We'll take a closer look at the numbers, analyze their ad strategy, and explore how this new revenue stream is shaping their financial landscape. But before we get into those numbers, let's zoom out and look at the bigger picture. Netflix's Q4 performance isn't just about short-term wins, it's about how they're positioning themselves for long-term dominance in the entertainment industry.
Okay, I'm all ears. What are some of the strategic moves that have you thinking long-term?
Well, remember those FIFA Women's World Cup rights they snagged for 2027 and 2031? They're clearly aiming to attract a wider audience, going beyond their traditional subscriber base and tapping into the cultural moments that everyone's talking about.
Ah, so it's not about quantity, it's about quality and impact. They're being selective, choosing events that create a sense of urgency and drive subscriptions.
I get it. It's FOMO on a global scale.
Exactly. And remember those 2 NFL games they aired on Christmas Day? That was a calculated risk test to see how in-season games perform on their platform. So they're dipping their toes into the waters of full-season sports without diving headfirst into expensive packages. It sounds like they're carefully analyzing the data to see what resonates with their audience.
Precisely. And it's not just live sports. They're also shaking up the film industry with movies like Carry On, starring Jason Bateman and Taron Egerton. It was a massive hit, and it never even saw the inside of a movie theater.
Hold on. Are you saying they're bypassing traditional theatrical releases and creating blockbuster-level movies exclusively for their platform? That's a bold move.
It is, and they're doing it with a fraction of the marketing budget that traditional studios spend. They're leveraging their platform, their recommendation algorithms, and their direct connection with millions of subscribers to generate buzz and drive viewership.
So they're cutting out the middleman and using their data to reach their audience directly. It sounds incredibly efficient.
It is. They're not just changing the way people consume content, they're changing the way content is created, marketed, and distributed.
Okay, so we've got live sports, we've got blockbuster movies skipping theaters. What else is in their long-term playbook?
Well, they're not abandoning the binge-worthy series that made them famous. We're talking new seasons of Squid Game, Wednesday, Stranger Things. These are global phenomena that generate huge excitement and keep subscribers hooked.
It's like they're creating a content library so vast and diverse that there's something for everyone. No wonder they're adding subscribers at such a rapid pace.
Exactly. They're estimating they only earned about 6% of the revenue opportunity in the countries and segments they currently serve.
Wow, 6%. That leaves a lot of room for growth.
A lot of room, but let's bring this back to our frugal living men listeners. They're all about making smart financial decisions. So is Netflix a stock they should be considering?
That's the million-dollar question, isn't it?
It is, and like any investment, it comes with risks. Netflix is operating in a fiercely competitive landscape, and their constant innovation means there will inevitably be some missteps along the way.
So it's not for the faint of heart.
Not at all, but for those investors who are comfortable with a bit of risk, who believe in Netflix's long-term vision, and who are willing to ride out some volatility, this could be a great opportunity.
Okay, so we've covered a lot of ground here. Record-breaking growth, a constantly evolving content strategy, new ventures into live events and movie production, those inevitable price increases, and a massive potential market. It's a lot to process.
It is, but before we wrap things up, I want to circle back to their ad-supported plan. Offering a lower-priced option seems like a brilliant move to attract budget-conscious viewers, while creating a new revenue stream.
It does seem like a win-win, but how are they ensuring the ad experience is positive for viewers? Nobody wants to be bombarded with irrelevant or annoying ads.
That's a great point, and one that Netflix is acutely aware of. They're not just cramming in as many ads as possible. They're taking a very measured approach, focusing on quality over quantity.
So they're being selective about the ads they show and working to integrate them seamlessly into the viewing experience.
Think of it like product placements in movies and TV shows. When done well, they can actually enhance the story. That's the approach Netflix is aiming for. Relevant, engaging, and non-intrusive ads.
It sounds like they're putting a lot of thought into this, but is it paying off? You mentioned exceeding their ad revenue goals. What were those goals and how do they compare to other players in the industry?
Well, they initially projected $4 billion in ad revenue for 2024 and exceeded that by over 10%, hitting $4.5 billion. To put that into perspective, that's more than double what Hulu generated in ad revenue last year.
Wow, that's impressive. It sounds like they're a serious contender in the ad-supported streaming space.
They are, and they're not stopping there. They're doubling down on this strategy in 2025 by investing heavily in their own ad technology. They're building their own ad server, which will give them more control over the entire advertising experience.
So they're not relying on third-party ad networks. They're building their own advertising infrastructure. That's a bold move and a costly one.
It is, but it signals their commitment to making advertising a core part of their business model. They're not just dabbling in ads, they're going all in. And it's paying off. They're able to offer advertisers more flexibility, more targeting options, and more sophisticated measurement tools.
So it's a win-win for both Netflix and their advertising partners. But what about the viewers? Are they being left out of the equation?
Not at all. Remember, their goal is to create a positive ad experience. They're using data to show viewers ads that are relevant to their interests, limiting ad frequency and exploring innovative ad formats. They're not just throwing banner ads at people and hoping for the best.
It sounds like they're taking a very strategic and data-driven approach to advertising.
They are, and it's a strategy that seems to be resonating with both advertisers and viewers.
Okay, so we've got record subscriber growth, a diverse content strategy, a successful foray into live sports and movie production, a booming ad business, and of course those price increases to help fund it all. It's a lot to digest, and it paints a very complex picture of Netflix's current position.
It does, but that's what makes these deep dives so valuable. We're unpacking the complexities, analyzing the data,
Yeah.
and providing you with the insights you need to make informed decisions.
Exactly. So for our Frugal Living Man listeners who are wondering, if Netflix stock is still a worthy investment, what's the bottom line?
Well, um, as we've discussed, Netflix is a company with a bold vision, a talented team, and a history of innovation. They're facing some challenges, but they're also creating incredible opportunities.
It sounds like a classic high-risk, high-reward scenario.
It is, and for those who believe in their long-term vision and are comfortable with some volatility, then it could be a very rewarding journey.
But it's important to do your research, understand the risks, and consider your own investment goals and risk tolerance before making any decisions.
Couldn't agree more.
Well, we've covered a lot of ground today, from subscriber growth to price hikes, from live sports to ad technology. It's been a fascinating journey into the world of Netflix.
It has, and it's a journey that's far from over.
Exactly. Netflix is constantly evolving, and it will be interesting to see what the future holds for this entertainment giant. But before we sign off, I want to leave our listeners with one final thought to ponder. Netflix is on a mission to entertain the world, but as they expand globally, they face the challenge of balancing their ambitions with creating content that resonates with local audiences.
Yeah, that's a key challenge for any global company, and it's one Netflix is tackling head on. They're building teams and infrastructure in key regions around the world, hiring local storytellers, producers, and executives who understand those specific markets.
So it's not just about translating English language content, it's about creating stories that feel authentic to different cultures.
Exactly, and it's a strategy they've been successful with. Look at Squid Game from Korea, Money Heist, from Spain, Lupin, from France. These shows captured global attention while maintaining a strong cultural identity.
It's like they've found the sweet spot, creating global hits with local flavor. But as they become more global, aren't they also dealing with a more complex regulatory landscape?
Yeah.
Different countries have different rules about content censorship and data privacy.
Absolutely. It's a challenge that's only going to become more complex as they expand their reach.
So how are they handling these regulatory hurdles? Are they compromising their creative vision to appease censors in certain countries?
Well, they're walking a tightrope. They're working closely with regulators in each market to ensure they're complying with local laws. But they're also committed to upholding their creative freedom.
So they're not simply giving in to every restriction.
Not at all. They're pushing back when necessary, advocating for their right to tell stories that challenge norms and spark conversations.
That's good to hear. They're not sacrificing their identity to enter new markets.
Exactly. They understand that their success is built on their ability to tell bold and innovative stories. But it's a delicate balancing act. They need to be respectful of local customs and regulations while maintaining their brand and creative integrity.
It sounds like they've assembled a team that can handle that challenge.
They're building a global network of talent and expertise, and they're investing heavily in understanding the intricacies of different markets.
So to sum it up for our Frugal Living Man listeners, is Netflix a buy, sell, or hold?
Well, as we've discussed, Netflix is a company with a bold vision, a talented team, and a history of innovation. They're facing some challenges, but they're also creating incredible opportunities.
It sounds like a classic high-risk, high-reward scenario.
It is, and for those who believe in their long-term vision and are comfortable with volatility, then it could be a very rewarding journey.
But it's important to do your research, understand the risks, and consider your own investment goals.
Couldn't agree more.
Well, this has been a fantastic deep dive into the world of Netflix. We've covered a lot of ground, from subscriber growth and price hikes to the challenges and opportunities of global expansion.
It's been a pleasure diving deep with you.
A huge thank you to Frugal Living Man for sponsoring this episode. Be sure to check them out for more savvy financial advice.
And to all our listeners, stay curious and keep exploring.
Until next time.